Hi everyone, my name is Ara Ogorian. This is Matt Crisafulli. We're with ACap Advisors and Accountants, and we're here today for our ACap ReCap, where we go behind the blog and answer some of the more pertinent questions. And today we're going to talk about some year-end tax and financial planning tips. So Matt, what are some year-end tax financial planning tips that you would recommend for our listeners?
Yeah, that's right. So the end of the year is actually a really important deadline for a lot of reasons. A lot of people think about tax deadline being really important, April or March or April, but the year end is a really important deadline. So the first thing that comes to mind is making sure you take your required minimum distributions from your IRA accounts, your IRAs, if you're over 70 and a half, or if you have an inherited IRA, taking your required minimum distributions from those accounts before 12/31, before year end. The second thing would be to maximize your retirement account. So if you're still saving for retirement, you want to make sure you put the maximum amount in before year end. For 2019, that's $19,000. If you're over 50, you have an extra $6,000 that you get to put in for $24,000 total, or $25,000 total. So that's another important one that you'll have to do before December 31st. One that sort of slips people's minds is contributing or using the flexible spending account money that you have accumulated through the year. As a reminder, flexible spending accounts are use it or lose it accounts, right?
Yeah, that's a good point.
You can carry over up to $500 into the next year, but if you have anything more than that, you're going to want to make sure you spend it. Otherwise, you lose that money for period. It's gone. And then another one that comes to mind is tax loss harvesting, and what that means is selling stocks that have declined in value in a brokerage account, a taxable brokerage account, not a retirement account, and realizing those losses to deduct them against your current year income. As a reminder, you can only take $3,000 of losses in a given year above and beyond your gains. So if you have gains, you can use your losses to offset those gains. If you have only losses, you can only take $3,000 of losses.
Those are some great tips, Matt. As you were talking, I was thinking about some other ones that would be helpful for our listeners. For example, delaying bonuses until maybe the following year, especially if you have a very good income year in a particular year and you're trying to delay it until the following year. That's a really good way to do it. Donating appreciated stock. So if you've got some stock that's gone up in value and you've got a low cost basis and you make charitable contributions throughout the year, you can donate that stock and you'll get the full write-off of the market value. So that way you don't pay capital gains tax, plus you get that write-off, which is a great way of reducing your tax liability. Another thing to do is to check your withholdings on your paycheck. Make sure that your withholdings are up to date. If you need to change them, the last thing you want to do is have a tax surprise come April. And then last one, which is really applicable starting maybe in 2018 going forward, and a lot of people are not familiar with, is really, especially if you're a small business owner or business owners, looking at your numbers, making sure that you qualify for this new 199A tax deduction, which is a huge deduction that's up to 20% of your taxable income. If you can get yourself to qualify for that, it will be a huge tax deduction for you.
Thank you for joining us. This has been the ACap ReCap, where we go behind the blog and take a little deeper into some questions that we get from our clients and prospective clients. Please like us on Facebook, follow us on Instagram and Twitter, and share so your friends can get the same quality information.